This is in reference to reasonable compensation paid to an officer of a company. And what I'm about to let you know also applies to you even if you are losing money. The rules are still in effect. If you are losing money, you still must show that you have reasonable compensation paid to the officer of a company. This is a new requirement. It came out on 12/29/2020. We haven't gotten to it until now. We knew it came out, but it came out right at the end of the year after PPP and ERTC and all those other programs have been going on. It's effective for the year 2021 tax filings. So the year end 2021 returns must have this in place. So the background is the IRS trained about 2,500 employees out of Austin, Texas in 2018 on how to perform reasonable audit compensation audits. Those exams were halted. All exams were halted for about a year or so. They've now started up again. And 20 years ago, I heard this: if all small businesses paid reasonable compensation, Social Security would be solvent. It still holds true today. Some of you have seen in news articles in the last month or two, government's looking at 87,000 new IRS employees over the coming years, with a heavy emphasis on examinations and audits. And you may have seen an article that came out earlier this week. 61% of all households did not pay any tax for the year 2020. That's a huge number. 21 is looking like 57%, not much of a change. So part of this is the key aspects is what's the IRS definition of reasonable compensation. It's many times it's not the same as yours. It's not the same as mine. I'm going to explain this further, but they're kind of giving us the guidelines here. Compensation must be reasonable, and it must be for services. I'm just giving you the highlights. I'm not going to give you all the details because we could spend hours on this. You've got to have a notice of acceptance S election if you're S Corp. There's a revenue ruling if you'd like to read it. Revenue ruling 74-44. This is where some of the guidance is coming from. They've also issued out IRS reasonable compensation guidelines from the IRS. There's a fact sheet. And if you want to look this up, it's 2009-25. Talks about what they expect from us and factors in determining reasonable compensation. Now, kind of what's all that leading into? This is the crux of the rule. They're not necessarily coming after companies directly. They're coming after preparers. The IRS will now assess tax preparers a penalty of $5,000 per instance for lack of documentation of reasonable compensation. They do not even have to do an audit if they find out that there's no documentation present. They can ask for it. If they find out no one has it, that's an easy $5,000 against preparer. And I will talk about very shortly here what exactly they want as documentation. So what's at stake for taxpayers? Well, you got taxes that will increase, interest and penalties and accuracy penalties. So they can go retroactive on a return and increase your taxes. And then, of course, you'll have interest and penalties for not paying enough taxes in on those payroll taxes that you should have paid. They can do multiple years. It has an impact upon your retirement plan, potentially. Your S Corp status could be revoked, which, of course, causes other issues right down the line. And again, this revenue procedure came out late on 12/29. It's kind of underneath called adequate disclosure. Again, it goes into effect for all 21 tax returns. In the past, there were tax court rulings that came out. There was the Watson case from 2010. There was once another one, McCallery from 2018, Glassbox Unlimited 2013. There's other tax court cases that many of us relied upon. So did the IRS. In fact, when the Watson case came out in 2010, the IRS showed up doing audits. It was a great case for them. They won the case, and they went out and conducted audits. And many of us have relied upon that as guidance. The guidance is now changing. It has changed. What is required now for documentation? The key point is, did the taxpayer provide through independent research and documentation to support reasonable compensation? That does not mean you agree with your CPA that should be your W-2 wages. That no longer can be used. You can't have a board of directors meeting and say, my board of directors agreed to what my compensation should be. That won't work either. We actually need to have it on file now, and we must assess this ourselves. Is documentation sufficient after reviewing that you do meet the standards of reasonable compensation, and it was independently done? Now, I have, unfortunately, in my hands, an IRS audit. And yes, it is on reasonable compensation. They just completed the exam. And yes, this client's probably listening to this, and they do acknowledge, it was on the phone call that we had with the IRS several weeks ago. We recommended W-2 wages be paid. Taxpayer did not pay any. IRS showed up for an audit. And in the documentation here that arrived yesterday, these are independently run reports documenting what reasonable wages are, exactly what the IRS notices came out. So they're following their own rules on this one. I've got them in hand. They ran 4 to 6 different reports to arrive at what reasonable compensation is. So planning and preparation in advance, we have the tools to create, document reasonable compensation based upon IRS criteria. We got the court rulings, and we use industry salary intelligence to support reasonable compensation. We need to have that on file now. All preparers need to have this on file. And if someone thinks they don't have to, they're going to be shocked. Unfortunately, when the IRS says you owe $5,000, and when that starts happening, they know who the preparers are. They start looking at all the other tax returns that the preparer has done, figuring if you didn't do it for one, you didn't do it for your other clients either. So it is what it is. The rules are changing. There's a huge pressure on the IRS to collect more money. And Congress is aware of that. A lot of people are aware of it. That's why they're looking to hire employees. So this needs to go in place for the year 2021 going forward, because your business will change. Your activities will change. We're gonna have to maintain it. We have the ability to do that. We've got some pretty good stuff that supports exactly, I can't make this up, exactly what the IRS is wanting. And they actually stuck to what they said, and they're doing it, unfortunately. So the exams have started. So let us know if you want assistance. And if you don't, we're going to need those reports from you showing that you independently assessed how you arrived at W-2 wages for the year 2021 going forward. It is very important now. It's the world we live in. There's a shortfall. We've seen it. Only 39% of households are paying taxes. And I think many of us understand this. At the end of the day, the tendency is you go after the businesses first. That's just the impression. All the businesses are stealing money. So that's who they're going to go after first. And that's unfortunately, it's going to happen. Anyway, so let us know if you'd like assistance. Here's a newsletter. Appreciate it. Thanks.